Strategy Roundtable, where we talk about current market conditions and answer any questions you might have. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, before we jump into a trading plan, let's talk about current market conditions. So we had PCE data, not a big surprise. We had better than expected initial claims yesterday. So macroeconomic data, GDP revision, better than expected. So no new signal in the yield, right? In terms of reaction to all the macroeconomic news, no new signal. 4.0 is your first, the support, right? Very close to April lows. So somewhere between 3.9 and 4 is your important support for the yield. Overhead resistance is the breakdown level, 4.2. So we're trading somewhere between 4.2 and 3.9, and I think it's stable. Dollar did bounce back from the oversold conditions, but still no new signal. It's kind of just sideways market since the announcement of tariffs back in April. Trading in a range. We do see a high yield pullback, so risk off. Choppy market, risk off trade. Whether you look at the high yield pullback to the 20-day moving average, one proxy for risk taking. Nvidia could be a good proxy for risk taking, right? It hasn't gone anywhere since basically middle of July. Trading sideways. Bitcoin under pressure, right? So Bitcoin retesting September lows, July lows, right? Very similar to Nvidia. They're highly correlated. You have China kind of pulled back. What else? Copper, FCX. Well, copper did not. FCX. Copper is actually had a strong week, but FCX had a pullback. And again, vertical moves in silver, 45 on almost 46 basically. Silver futures, gold futures are 3,800. So again, we're almost at all-time highs on SPX, almost at all-time highs at gold and silver. And the spiders also close to all-time highs, basically retested the Fed announcement, Powell's decision on 25 basis point cuts, right? So 20-day moving average, 655 is our support. We had a pullback, day 1, day 2, day 3, we'll see we're at session low right now. So I would watch yesterday's low, right? If we break yesterday's low, and that would be 2-week low. Right? If we break the last 2 weeks low, then next level could be probably 650, 640, right? 650, 640. We'll see where we're going to close today. Any questions? In terms of positioning, if you look at the positioning data, let's look at stock forecast Toolbox. So stock forecast Toolbox actually turned positive. Today basically said that short-term market is getting to oversold levels and should bounce. It could reach 650 level. It does see 650 as a support, but it also sees 680 as overhead resistance, right? Going into the next earnings season. So when the next earnings season starts, we could make new highs, break the 670 level, and get as high as either 670 or 680. On the downside, for now, it doesn't see momentum below 650. If you zoom out, if you look at the 6 months prediction for the months, if you look for the months of September, 584 to 650, right? So 650 is important support, right? It was overhead resistance, now became support. Obviously, model is a lot more bearish. It sees potential pullback to 590, 600 level in the next couple months. Maybe that would be extreme. Something has to happen in the market to pull back 10%, right? More realistic is either 640, maybe 630, right? September, October, right? 640, 630 makes more sense to me, right? So again, market is overbought based on the long term, right? Based on the long term, medium term, it's overbought and potentially could pull back, right, to 640, to 636, 636. But you know, it also can continue grinding higher because we did reach 670. So we did overshot by 4% predicted high, so that momentum can continue. Good morning, Joseph. PJ, Dan, Joseph, Raul, Tim. Trader. Not sure if it's Tim. All right. Any questions? So that's stock forecast toolbox. Our position again from seasonality point of view. Another tool we use. Very high correlation, 85% correlation. Usually, actually in September, it does pull back, right? The last couple of weeks of September. Hasn't happened yet, right? I mean, we're already end of September, so October is next week. And October usually relatively better months, right? So we'll see if this pullback maybe carries into October. Some of the risks are government shutdown, right? The probability of government shutdown is elevated. And if it is shut down, especially for how long, right? That could create volatility in the market. After government shutdown, assuming there's no escalation in tariffs, like we had some escalation, right, on heavy trucks, on some of the pharmaceuticals that don't manufacture in the United States. That has an impact on I mean, sector stocks, right? Like LA Lilly is up, NVO, right? NVO is down, right? So you could have these effects, and depending on the tariffs and you know which industries and impact, it could also create volatility. And the other risks are either inflation going to start going higher, which there are no signs of that, or I mean some signs, right? We have like mixed bag of CPI, PPI prints in the past few months. But for now, I think it's still trending, going in the right direction, trending lower. Maybe not to 2% target, but going in the right direction, especially when you look at the rents data and some of the services data. And then unemployment data, right? But initial claims were better. Ukraine could heat up later. Trump recommended take Russia. Yeah, but Ukraine, Russia, that's been there for, unfortunately, a long time and kind of status quo, at least for now. But that is a risk. That's definitely a risk. Also benefit, right? If they do reach an agreement with Putin, then that potentially could propel market higher. But outside of this risk, you can see gamma flip is at 6,600. That's been a very important support. This is exactly where we're trading right now, 6,600, almost to the penny. And 6,600 is a put wall. So that's been kind of a main support resistance level. Not a lot of positioning, right? You can see actually most of the positioning now is in this Friday expiration, right? People were afraid sell in September, I guess. More people are hedging this Friday, which expires in October. So still only $30 billion worth of positioning in October, not much in November, and then about 36 billion in December. I'm not sure if that's enough to support the current market, right? So that is a risk that if there's negative news and people are not hedging, they get caught off guard, you could have a sharper pullback. And that still persists. But for now, I'm bullish. I think 6,500, as long as we're above 6,500, this is what, close to 50-day moving average. Yeah, as long as we're above 65, 650, 6,500. Close to 50, yeah, then I would be a buyer, right? I would be a buyer, right? So I think that's, you know, but at the same time, I would not chase the market, you know, potentially buy and pullbacks as opposed to chase the market. Any questions? And again, I always do this exercise, you know, what do we think is going to be the end of the year, right? So Goldman Sachs, if you look at the one standard deviation, so let's do not all, but let's do, well, I guess October and September. Let's do October and December. Let's start thinking about the end of the year. That's where most of the position is right now. So based on supply and demand for this data, December is all the way to 69. So right now it's all the way to 7,000. Okay. So one scenario, we break through the 6,800 and we end about 7,000. Right. That's scenario number one, going into December. Scenario number two, we're trading, somewhere between 6,400, right? This is one standard deviation, and recent highs 6,700, maybe 6,750. Right, scenario number two. Right, scenario number one, there are no, signs of recession or unemployment rising rapidly or inflation rising rapidly. Double-digit growth on next earnings cycle starts in October. No government shutdown, and then market just continues going higher, right? Maybe taxes get reduced and stuff like that. So one, right? So we close the year somewhere between 6,800 and 7,000. Scenario number two, where market is overbought, triggered Warren Buffett's index, where market is at all-time overbought, according to Warren Buffett. So then we trade sideways, right? No positive catalyst. We have some good news, some bad news, and we just trade in the range. And then scenario number one, we break below 6,400, right? Maybe 6,200, maybe 6,000, like the models propose 6,000 level. And then you have scenario number three. So that's I would start thinking about, now that September is almost behind us, where are we going into next earnings cycle, right? November, December. So scenario number one, we end the year somewhere between 6,800, 7,000. Scenario two, we end the year somewhere in this range, maybe 6,500, maybe 6,600. Scenario number three, we're ending the year closer to 61, 6,200. Joseph, Mon, BJ, what do you think? Dan, Ed, Gene, Jeff, Joseph, Raul. Several traders. Any opinion? Scenario two, I think there's government shutdown for a few days, impacts of the tariff are also not for. Okay, two. All right, most people think two. I'm gonna go with one. Right? It's a strong momentum. I understand market is overbought. I understand there are risks, but if it didn't sell off in September or October, assuming no government shutdown or any escalations, kind of business as usual, right? I mean, there's a risk that we might fall up. I don't know when the tariffs are due on China, right? They postponed 90 days, I think, into December, right? Maybe that's why you have more contracts in December. So there could be fall apart in December where Trump says, China is not negotiating in good faith, 200% tariffs, here you go. That would be a trigger, something like that would be a trigger, and then I think that's not due until December, that the market, could reach, I guess, 6,800, 7,000 and then pull back. Possible, completely possible, but I'm gonna go with one. Maybe not chase the market right now, but buy the dips, right? Buy the dips as we approach the end of the year. Any questions? I have a lot of people, that's great. DJ, Dan, Ed, Gene, Jeff, Joseph, Raul, trader. Also likely flare up Ukraine or Israel. Yeah, Middle East, Russia, Ukraine. Timing these events are very difficult. I would argue impossible, right? I mean, unless you have some inside information. That is a risk, but is it going to happen October, November? I don't know. But I agree if they do, and this is why you want to hedge, right? You do want to have not all of your positions bullish. You want to use spreads, or maybe short some stock, or buy inverse ETF like PSQ or SH, but have at least some of your positioning where you are mitigating the risk. I believe number three. Where do I stand on gold? Gold. I mean, I do have gold and silver. Right, I think maybe 5% of your portfolio should be gold and silver. Right, it's a tale of two cities, right? And you know, silver and gold continues to go high, right? Silver is in all-time high, right? You have to go back to 2011, right after financial crisis, when we had some right, Portugal interest rate dislocations in Portugal, Greece, you know, market depth. Only then we reach these type of levels. So obviously they're overbought and kind of vertical moves to the upside. I think that trade continues on, right, until you have some kind of a sharp reversal, right? We haven't had any of the extreme volumes we had in 2011, right? So I think this rally only ends on above average volume reversal, right? But for now, it continues going higher, in my opinion. Right? Or fears of inflation, right, subside. So I mean, I guess this is, you know, I would think about it as a hedge, right? People are hedging, using gold and silver to hedge. But I mean, obviously overbought, overextended, maybe buy the dips. Any questions? All right, so how do we help? Again, stock forecast toolbox, you know, you can add your stocks that you want to watch, you know, look at this predicted low, predicted high, right? You can look at the company screener, which sectors are going higher, right? Which sectors are leading the market. This is all end of beginning of months, long-term trends. This is the company finder. And you can type in any stock, ETF, and look at the 6 months prediction, 10-day prediction, 1 hour prediction. We looked at the seasonality chart. We looked at the probability calculator, right? So based on historical volatility, again, in the next 50 days, we revisiting the highs, 670, maybe 680, and then on the downside, 650, 640, right? So you can type in any symbol and look at the probability calculator, seasonality chart. This is all historical volatility, right? This is implied volatility, right? This is implied volatility based on supply and demand for option contracts. What else? Signals. So a lot of people look for membership at Tradespoon for signals, all right? They have a trading plan. They know what they're doing. They just need signals based on AI that gives them, you know, certain confidence level that this signal will outperform the market, will outperform peer groups. So that's active trader, weekly trader, and monthly trader, right? So if you're looking for signals for today, there was Halliburton, right? Morgan Stanley. So Halliburton moving vertically up. Morgan Stanley continue going higher, right? Strong performance in Halliburton, Morgan Stanley. These are meant to be short-term signals. You might hold it for a couple hours, you might hold it for a couple days, but these are short-term aggressive signals that get updated every single day and published on the website. The idea is to have only 4 active positions at a time with maximum loss of 2.5%. So you don't risk more than 10%. If you do put 4 positions and tomorrow market pulls back 2-3%. Because of the tariffs on China, you don't want to, you want to control your portfolio drawdown. So this is an important note. I encourage you to do this. Sometimes stock forecast toolbox not aligned with active trader. Active trader uses different models, you know, and it could be a short-term model, doesn't coincide with a long-term model, but you know, this is something to also consider. And then some of these signals I actually do trade in the, oops, let's see, wrong login. Let's try it again. Okay. So some of these signals are, some of these trades actually trade. Right, so Halliburton, it looks strong, right? Energy, usually from seasonality. You can look at today's live trading room, right? Part of the lead circle is live trading room. You can watch the recording of Morning Bell and Closing Bell, where I discuss all these trades, all these signals, right? My take on them, how to use them. So I encourage you to try to participate in Morning Bell and Closing Bell. If you don't have subscription, we do have 30-day money back guarantee, but these are the signals, and some of them I trade, right? Like Halliburton. So I have Halliburton position today. Some of them are spreads, right? I did spider spreads this week. I do short-term trade and longer-term trade options. So this example of spider spreads, right, where I sold it for 30 cents, closed it for 4 cents, right? So this is this week trade, and I can do them periodically. Longer-term trade name is STX, right? I had an STX position, and I got out of the trade at $4.70. So these are the examples of both option and stock spreads. You can, if you want to see what I trade, then you can participate either Elite Circle, right, or Shadow Trader. And if you're looking for one-on-one coaching, right, if you look at these signals and you basically say, well, I have no idea, I just started trading them. What if Halliburton gaps up? What if it already, you know, bypassed entry level? What do I do? Then I do encourage you to consider one-on-one coaching. We do have one-on-one coaching where we can give you a trading plan, right? There's no universal answer, right? One-on-one coaching. Everybody manages different amount of money, different methods, different risk tolerance levels. So you do need kind of a one-on-one attention, but that requires time, financial commitment, right? It's a skill. It takes time to learn. So consider one-on-one coaching. If not, I understand, then I would try to, if you still have questions about these signals, right, I would try to join live trading room every day. We have live trading, and then we'll be more than happy to answer your questions. But in general, strategy A, you look at the pre-market futures like today. If we're up, then maybe we're not going to reach 23.51 on Halliburton. Then entry 1, 24.66, right? If it gapped up this morning, right, did it gap up? Around Halliburton. I mean, you could have got in at 24.80, 24.90, right? So, then it's up to you, right? You can basically, usually I propose to wait 15 minutes. So then you find support, you know where resistance are, and you can see we broke through 25 level. 25 is your support now, so you can say, okay, my risk is 40 cents, right? 1.5%, 2% risk. And then you would buy here, and then if you did wait 15 minutes and bought, let's say at 25.30, you could exit 25.60 for 1% gain, or you hold it for tomorrow because you think it will continue, the trade will continue. So that's how I would use active trader. Weekly trader and monthly trader gets updated every Sunday, different model, but very similar approach. It runs on the weekend and basically gives you stock or option ideas. You can execute them both. This week, Google Broadcom, right? You buy Broadcom at 331, right? Kind of where it is now. And then you're looking for 2.5% gain or 2.5% stop loss, right? And you put that trade on Monday. And then also, similar approach, monthly trader. If you want to do option trades, you can always go to weekly trader, click on options, and you have options, right? Google, Broadcom, strong performance in both names. Any questions on active trader, weekly trader, monthly trader, right? These are signals. You manage them on your own. You can get one-on-one coaching program if you're interested, or participate in live trading if you need additional help of how to interpret signals, because every day is different, right? If the market sells off, then these signals are not going to work, right? Bullish, bearish will, but not the bullish. So you have to kind of have your trading plan before you execute these signals. If you want to see how I execute them, then you do have Elite Circle, Shadow Trader. You can participate. You have access to live trading room, right? You have access to live trading room, access to all my orders, positions. If you can't be in the live trading room, you can watch the recordings. I encourage you to watch all the recordings. And that would be my proposal. 9:57. Any questions about between now and end of the year and what's going on with Meta today? Let's find out. Is it down? Is it up? I think it's just choppy market, but it is retesting an important support level, right? This is a breakout of 2025 February high, below 50-day moving average, right? Below 50-day moving average. I mean, you know, September low is 724. I mean, as long as it's 724, I wouldn't worry about it, but you know, not also, right? Amazon is similar, right? Too high valuation. One of the bearish argument is the valuations are very high. We need some kind of a pullback. Right? Amazon is a 200-day moving average, and I would argue maybe this is the time to start thinking about buying Amazon. To get in and out of today. Today I did not do any short-term trading, no day trading, but today I did do Halliburton. And you know, if it continues to rally, I will get out today because I have 2.5% gain, target gain. So if Halliburton continues on, you know, another 1 or 2%, then yes, then I would get out of the Halliburton position. But for now, kind of waiting. Usually I don't do day trading. Any other questions? Jeff, trader. All right, if there are no other questions, you guys were wonderful. Thank you for your support. Thank you for your attendance. We have a lot of people today. I really appreciate that. Next Friday, same time, same place. I will see you guys next Friday. Thank you. Have a great weekend.